Good morning and thanks so much for tuning in. Happy Friday to you. You're watching Trade Talk on Biki Prime. My name is Alex Matthew and with me is Hiral Daria. Morning, Hiral.
Good morning, Alex. Yesterday, probably we thought that even a Thursday would be a happy Thursday, seeing the way markets open, but probably it didn't really hold up.
Absolutely. We saw consolidation in the markets. And I think the big disappointment or the reason why the benchmarks declined over the course of the day was Reliance Industries, which proved to be quite a bit of a drag on the benchmark. And today as well, the handover from overseas is not the best. Of course, everyone is paying attention to what will happen later in the day, which will be the address by Fed Chair Jerome Powell at Jackson Hole, which is ongoing. And overnight, you saw bond yields in the US spike. You saw equity markets fall quite dramatically. The tech rally that you saw post NVIDIA's results has fizzled kind of. Just about 2% or thereabouts cuts for the NASDAQ.
Absolutely. And that's what I think our markets are trying to mirror as well. And as Alex mentioned, Reliance Industries was one of the biggest reasons why we did see that profit booking that did come in the last hour of trade. Overall, if you go to see in terms of the stock, it ended almost around 1.8 to 1.9% lower. If I'm not mistaken, a little over 70 lakh shares was something that seemed like in terms of volumes. Now, with Reliance Industries, Geo Financial Services has also been playing its role with a fourth consecutive session of a lower circuit. Overall, if you go to see, the markets continue to remain range bound and the bias is now turning negative as well. And the investors are not really willing to take big bets, right? So that's an interesting aspect that we need to consider, because the confidence that investors had earlier in the markets, that's also diminishing. And that's one of the reasons why we're seeing the breadth also absolutely narrow. With a buoyant start, we did take a U-turn in yesterday's session. Yes, the Jackson Hole commentary will be crucial today. And a sell-off post-gap up opening is actually giving us, cues that there is resilience of the bears in the market currently. And the time-wise correction phase, that continues to remain intact. Overall, if you go to see in terms of Nifty 50, 19,300 is expected to cushion any further slip. And 19,500 remains actually a daunting task as well. So any decisive break could only re-strengthen the undertone in terms of where Nifty goes. Overall, yes, the broader markets continue to outperform. So that's where the strength is. And that is what is actually continuing to lure the investors as well. And that's where the buying is happening. Bank Nifty 44,200 is where the support is. And 44,000 is expected to hold absolutely firm. We are seeing resistance at around 45,000 levels. And throughout the month of August, 45,000 has acted as a key hurdle as well with regards to Bank Nifty. So these are levels we should be watching out for. But clearly, there is consolidation that continues in the markets. Now, whether the bias continues to remain negative or not is what we need to see, because the positivity is not holding up.
Certainly. And therefore, attention goes to individual sectors, individual names more so. And that is essentially what has played out over the past couple of weeks at the very least. Of course, Reliance Industries and the decline that you saw in trade yesterday for Reliance Industries provides the perfect springboard for the first conversation of the day. And we're focusing in on the oil and gas space. And of course, the first quarter results were a mixed bag for both the upstream as well as the downstream companies. For the upstream companies, the conversation had to do with the marketing margins, the fact that it supported earnings. But let's give you a perspective on that before we get the expert to tell you how to play this space. We've got Mihika joining in to give you some perspective at the start to lay the context. Mihika, mixed bag, but what can you tell us if you can break it down between upstream and downstream?
Yeah. So just to sum it up before I go into detail, the upstream companies delivered a weak Q1 while the downstream companies posted triple-digit growths and recouped the last year losses. Let's first come to the performance of the downstream firms, which includes Bharat Petroleum, Hindustan Petroleum, Indian Oil and Mangalore Refinery and Petrochemicals. In the first quarter, refinery revenues were adversely affected by the subdued industry demand and low oil prices. Despite Mangalore Refinery experiencing a significant 56.12% and 62.6% decline in EBITDA and net profit, the other three oil marketing companies managed to rebound their EBITDA and net losses from the previous year. Additionally, the collective achieved a notable margin improvement of 14.75 basis points, primarily driven by the primary growth in the refinery sector. Now, what contributed to this growth? While Q1 displayed weak gross refining margins, the primary driver of the growth were the supernormal marketing margins that the companies experienced. To mitigate the previous losses, the companies maintained retail prices steady despite the considerable reductions in the market prices, resulting in higher than average margins of rupees 7 and rupees 11 rupees per litre on diesel and petrol respectively. Now coming to what lies ahead for the downstream companies in the upcoming quarter, as Russian Ural prices trade above the $60 caps, and the discount on refining oil prices reduces, and while crude prices also stabilize, OMCs could see a reversal in their marketing margins. The integrated margins, which includes both the refining and marketing margins, have already started normalizing post the abnormally high numbers in Q1. But since the decrease in margins is gradual, the companies are poised to recoup their previous losses in the coming quarters. Additionally, the anticipated demand for the petroleum products could also pose for a significant tailwind in terms of revenues. Moving on to how the stocks have performed, Mangalore Refinery tops year-to-date return at 60%, followed by Indian Oil at 18%. Bharat Petroleum leads the highest buy calls at 23, with Indian Oil and Hindustan Petroleum at 22 and 18 respectively. And Mangalore Refinery has 0 buy calls as per ANR. While we look at the valuations, the firms are all trading below the industry P of 9.98. Indian Oil, Hindustan and Bharat Petroleum have lower current Ps than their 5-year historical averages, while Mangalore Refinery is 3 times higher. Turning to the upstream sector, we take into account companies like Reliance Industries, ONGC, and Oil India. The sector collectively experienced a 21% revenue drop and a 34% net profit decline in Q1. The weak earnings resulted from the sharp crude oil prices reductions and the soft demand in the downstream petroleum sector. Recessionary fears, high interest costs, and lower Chinese market ramp up led to destocking, and this resulted in lower price realizations on the downstream products. Looking ahead, the upstream products will invest in enhancing their production from their mature fields and maintaining the adequate reserves. Revenues can see a growth coming in the following quarters because oil prices are expected to rise on the back of Saudi Arabia's extended voluntary production cuts. The Energy International Agency has also raised its 2023 oil demand to 101.19 million, and also revised the 2023 Brent crude projection to 82.62 per barrel. In line with these anticipations, Brent crude has also risen 4% year to date and 1% in a month. Additionally, the augmentation in the natural gas production from the oil exploration companies could boost their earnings. Reliance Industries also increased their production to 24 million cubic meters per day in 2024 from 19 last year. Concluding on the upstream firms, the stock performance, Reliance Industry has the highest buy calls of 32, ONGC follows at 21, and Oil India at 15. Year to date, Oil India has the highest year to date stock performance at 35%, while Reliance has dipped 3%. All the companies are trading lower to their historical PEs except Reliance, which trades at 26, which is twice the industry PE.
Right. So that's an interesting analysis, Mika, for us. Thank you for getting us all the details. Now, taking cues from Mika, what Mika has told us about upstream and downstream companies, let's welcome in Yogesh Patil, Equity Research VP Analyst, Oil and Gas at Daulat Capital. Yogesh, good morning and welcome to the show.
Morning.
Yogesh, let's start with where Mika ended, specifically with the upstream sector. Now, from here on, if you see in terms of the first quarter, the revenues, the low price realizations, all of this was on the back of lower crude prices. Now that we're looking at around an average of 82.62 per barrel, what's the sense that you pick up in terms of the coming quarters, specifically for the upstream companies? Yogesh, are you able to hear me?
So, good morning. We have the two things are there to discuss here: upstream and the downstream companies. So, I will start with. Yeah, I'm getting your voice clearly. Am I audible?
Yes, Yogesh, you're audible. You can go ahead.
Am I audible? Thank you. So good morning again. So witnessing the improvement in a GRM in the recent last weeks, that is mainly due to the diesel cracks are at a super normal level to the $30 per barrel. versus the long-term average of $16 per barrel. That is one thing. Secondly, jet kero cracks are also at a higher levels. Fuel cracks also improved in the last few weeks. These are the major drivers for the downstream segment and mostly for the refining segment. As per our estimates, the global demand growth for the transportation fuel like the diesel and gasoline is outpacing the new refining capacity additions. We believe margins will remain robust at least for next few quarters or at least for the next few weeks. Looking into the Indian GRM or mostly to the OMCs, which are diesel heavy. Indian OMCs are diesel heavy with the diesel products rates of close to 50%. So rising crude cracks will support to the OMCs refining margins. That is one thing. Between 2022 to 2024, Bloomberg expects the global gasoline and diesel supply to increase by 3 lakhs barrels per day and 5 lakhs barrels per day respectively. While global demand for the same gasoline and diesel is much higher compared to the supply side. So this clearly indicates
I think we have quite a bit of an issue with the feed that we're getting from Yogesh, but interesting insights that he's provided. And of course, Mihika has already given us quite a bit of context. Perhaps we'll revisit the conversation at some point in the coming days. But certainly, Reliance Industries among the pack also, from what we saw in the stock performance year to date, has underperformed, but still at this juncture has quite a bit of the buy calls in the space. So let's, in fact, shift gears and talk about the telecom space, also something that Reliance Industries is present in. We've got the latest data coming in from TRI, and we've got Rishi joining in to give us all of the details here. Rishi, good morning.
Good morning.
What are the latest updates here?
So with regards to the June data, Reliance Jio gained the maximum number of subscribers within the sector. It gained about 22.7 lakh new subscribers, although it was lower than May, the gain in that it had in May. This is the 16th straight month of subscriber addition for Jio, so that's going well for Jio. Then there's Bharti Airtel that had about 14 lakh of additions, while BSNL and Vodafone Idea continue to lose subscribers. Vodafone Idea, in fact, the number of subscriber losses were much lower than what it had experienced in May. If you have a look at its at the market share data as well, Bharti Airtel and Jio continue to dominate the sector with about 32.68% for Airtel and 38.35% for Jio. And overall for the sector as well, there were very marginal changes in the market share and continues to remain more or less similar to what it was in May. If you look at a couple of brokerages, what they have said with regards to the data, firstly, there was MK that came out with a report. So Jio has also maintained its lead with regards to wireline subscribers as well, by adding another 0.25 million subscribers. And even as Jio and Bharti continue with their 5G rollouts, their timings of the tariff hikes is something that is key. More than whether or not they will hike, the timing is what it is key. And that is what even Airtel's management has also guided for. Airtel is in fact looking at about 200 rupees of ARPU in the near term and maybe an aspirational 300 in the long term as well. If you also look at Vodafone Idea, it needs a sizable fundraise is what MK is saying with regards to increasing its capex more and more so that it can reduce its subscriber losses in the future.
Right. Thanks, Rishi, for getting us the details. It's going to be interesting to see because Jio's market share continues to see gains as well. So that's the interesting aspect that we need to look at. Let's see if that, gets us to see a positive move in terms of Reliance Industries. Not really always, but probably that
the metrics
could be
and I think the most important metric, not too much to say in terms of the change in the market share. Of course, the same trends continue with the two major players consolidating further and Vodafone losing. But then it's, I think, going to be more important and critical to watch how the ARPUs increase, because that really is the metric, whether the Indian customer will be okay with paying that higher amount of money per data usage.
I mean, that's a complete price war that we're talking about, and
absolutely.
what both of them do as well. So watch out for this place pretty closely. But moving from here on, you have a lot of defense companies that have been in the news, as well as on space technology or in the back of Chandrayaan. Saloni is standing by to get us more in terms of what are the key updates with themes like a BEL, HAL, etc.
Right. So a lot of defense companies in focus today. So first we've got Bharat Electronics. So in order to enhance the efficiency of the Indian Air Force, the Defense Acquisition Council has granted an acceptance of necessity for the procurement and installment of electronic warfare suite on Mi-17 V5 helicopters under the BI category, which will enhance better survivability of helicopters. This electronic warfare suite is to be procured from Bharat Electronics. Next, we've got Garden Reach Shipbuilders and Engineers. So the company signed a memorandum of understanding with the Dempo Group to launch a collaboration model to build commercial vessels in Dempo Group's shipyards at Goa and Bhavnagar in Gujarat. The financial implications for this MOU are yet to be ascertained. Third, we have Astra Microwave Products that bagged orders worth rupees 158 crore from the DRDO, ISRO and DPSUs. These orders are for the supply of satellite subsystems, airborne radar and subsystems of radar and electronic welfare projects. And lastly, there is news on Hindustan Aeronautics. So on account of the success in the space sector with Chandrayaan-3, the indigenous aerospace sector is set to receive a major boost as the Indian Air Force has plans to place orders for about 100 more LCA Mark 1A fighter jets. So the Air Force has decided to buy these from Hindustan Aeronautics, and the proposal for the same has been submitted to the Defense Ministry. So the defense officials have said that this project is expected to receive clearance soon, and it is to give the biggest ever boost to the private defense aerospace sector.
All right. So those are the defense stocks. There's also more news and more stocks in focus, Saloni. You've got more that you've compiled. What do you have on your list?
So a lot of other stocks as well, starting with Kaynes Technology, that signed a memorandum of agreement with the government of Karnataka for rupees 3,750 crore. So Kaynes Semicon Private Limited will lead the setup of a semiconductor assembly and testing facility, and Kaynes Circuits India Private Limited will spearhead the establishment of a printed circuit board manufacturing plant for producing complex multi-layered boards. Then we've got DB Realty that sold its entire stake in unit Royal Netra Constructions for rupees 2.55 crore to Man Infra Construction and Platinum Corp Constructions. The total sale was of 9,800 odd shares at rupees 2,600 per share. Next is Prakash Industries. So the Ministry of Environment, Forest and Climate Change granted its in principle stage 1 approval to the company for its Bhaskarpara commercial coal mine in Chhattisgarh. And lastly, we have news on Reliance Industries that entered into an understanding with the Oberoi Hotels and Resorts to jointly manage 3 properties across India and the UK. These include the upcoming Anant Villas Hotel in Mumbai's BKC, the iconic Stoke Park in the UK, and another planned project in Gujarat.
Right. Thank you, Saloni, for getting us all the details as well. So a lot of other names, and it's going to be interesting to see how EIH also gets impacted on the deal that Oberoi and Reliance has done with regards to newer hotels. So the hotel sector as a space probably could see some bit of pressure on the back of this news as well. But moving on, you have Varsha who's joining by to get us more stocks that she has been tracking, which are in focus today. Varsha, over to you.
Yeah, so few stocks that one should watch out. So first two, I'll be talking about pharmaceutical companies. So first we have Granules India. So drug maker received the approval from Brazilian Health Regulatory Agency for compliance with the guidelines of good manufacturing practices for its Bonthapalli API facility, Hyderabad, and also accreditation certificate for foreign drug manufacturer from Pharmaceuticals and Medical Device Agency, Japan, for its JD Metla API facility, Hyderabad. The other pharmaceutical company that we have is GlaxoSmithKline Pharmaceuticals, where the drug maker has reported contingent liabilities of almost 350 crores on account of ongoing litigations. Now, the point is, if company loses this litigation, then they have to pay this amount. Then we have agrochemical maker PI Industries on Thursday reported an incidence of bromine leakage at the company's manufacturing site located at Jambusar in Gujarat. Now, bromine is difficult chemistry to handle, but fortunately, it reported insignificant loss on account of the minor leakage. Then we have KPI Green Energy. So the company received commissioning certificates from Gujarat Energy Development Agency for a 4 megawatt wind solar hybrid power project at Samod site in Jambusar, Gujarat. Now, India has committed for a goal of 500 gigawatt renewable energy capacity by 2030. So, a lot of opportunities for these companies. So, yeah, so all these companies that one should, look out for.
Absolutely. And over the past few days, we've been looking at several bunch trades as well. You've made a compilation of the latest ones that we saw.
Yes.
What are the details here?
So, Alex, right, shares worth over rupees 9,000 crores changed hands after large trades were executed on Thursday. Plus, the companies that witnessed block deals included Coforge, then Geo Financial Services, then Max Financial Services, and Manappuram. So now viewers can see on screen the details for the same. But now let's deep dive into who were all involved in the transactions. So the Coforge that we have, so the sellers for the Coforge is Hulse BV. So its stake was bought by SBI Mutual Fund, then Kotak Funds, then Small Cap World Fund, and then we have Max Financial Services, where Max Ventures Services were the sellers, while UBS Group, Plutus Wealth Management, and Key among were the buyers. Then Sapphire Foods, if you see, sellers were again Sapphire Foods, Mauritius, while WMP Dublin, EM Opportunities, and Sprugos Investments were the sellers. Lastly, the Manappuram Finance, if you see, Quinine Acquisition were the sellers for the stake, while Mansi Share and Stock Advisors, BofA Securities were the buyers.
All right.
That's an interesting list, right? In terms of how the blocks and bulks have happened. And clearly, little over 9,000 odd crores is not a small number that has come in for a single day.
Yeah.
And that's been the trend. I think an analysis of the last 2 months and the quantum of participation that tells you the depth in the markets as well, Alex.
Certainly. And, in certain cases, you've seen, particularly in Coforge, I thought yesterday, you had such a lot of trade that was taking place, but the stock was up maybe 1.5%.
Yeah, I mean, when the block happened, it did slip lower. Then the way it recovered and it ended in the positive.
And so that just kind of tells you what kind of depth you have in the Indian equity markets right now. And I think that's a great sentiment to take into the start of trade as well. As things stand, it's likely to be a bit of a wobbly start considering the kind of handover that we've gotten from overseas and also the kind of trade that you have in the morning in the Asia Pacific region. But we'll get you all of the live action right here on BQ Prime, so don't forget to check it out.